Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, October 21st, 2022. Big week for the markets. It wasn't easy though. We had a big gap up on Monday. We'll talk about that in a moment when we look at the charts. Energy names had the biggest week. Bonds have had the worst, down 5.5%. And the semiconductors kind of came roaring back here as well. Close to positive on the month, but still down 40% year to date. So let's take a look at these charts and make some sense of it. For the S&P 500, we are holding back above the prior low, that is. And as I've been pointing out the last week and a half or so, it's looking a lot more like an inverted head and shoulders pattern here. The good news is we're above that 20-day moving average, and that begins to rise on Monday as we get rid of this data over here. So we are in shape for a continuation of this. I kind of said the same thing on Thursday, and then we got punched back by the market here at the volume weighted average price from this prior peak in September. So that black volume weighted average price is the volume weighted average price from the peak in September. This is the second time we've kind of closed above it right over here, third time maybe. On Monday, I'm always looking for the lowest risk entry if you're not in already. I would like to see it pull back like this and then get the energy to build and continue beyond, let's say this, beyond this. So to rally back towards that volume weighted average price and today's volume weighted average price. Hopefully that could give us an opportunity to get involved if you're not already. We had a pullback here this morning, and it kind of was looking like, is this going to be another fade like we saw yesterday? But fortunately, we held at the 5-day moving average, which is rising again, and we're able to put in a very nice rally of 10 points, pretty much uninterrupted. That's why I'd like to see a refresher first. So again, the big gap on Monday and then a gap on Tuesday, and we're right back to where we started the morning on Tuesday. So a whole bunch of chop in between. But the important thing, most important thing that I can see on here is that we are holding the volume weighted average price from the low 2 weeks ago when the CPI came out on that Thursday, so 11 days ago. That's that green line. The volume weighted average price for the high this month also came into that same exact area on Thursday, and that was kind of a do or die area. So it did instead right here, and that's the good news. If this is truly an inverted head and shoulders pattern, it does have a good measured move objective. The measured move is simply trying to estimate, what we call the height of the pattern, which is 350 to 375. We've gone through this math before. That's 25 points added to the breakout point of 375. That gives us an upward objective near this volume weighted average price from the March high up at 400. So I don't look at it as, hey, we're above that, that's time to buy and to look for it to just go to 400, because we've still got the potential resistance at the volume weighted average price from the August high right here and from that summer low right here, which kind of ties in with this declining 50-day moving average. So I think a more realistic type of activity would be, again, hopefully a pullback, but a lot of times we see that we don't get that, and then rally up towards that 50-day moving average, maybe another little push lower. This volume weighted average price comes like this, the 20-day moving average starts to come up like that. We could pull down and maybe then head towards that 400 into November and December. That's the potential for the bullish scenario. We've always got to be aware that what is the risk? The risk is if we get below and hold below 364, then all bets are off. So if you can make a good low risk entry above 364-ish, then I think that you want to give it a bullish bias for the intermediate term. I am not calling a bottom. That's not my job. That's not my interest. That's not my goal. I'm trying to make money in the emerging trends that occur. We're in a primary downtrend, so I don't trust this rally, but maybe we're going to get it up to the volume weighted average price from the COVID low this week. That's also what was the 38.2% retracement. So that's the S&P 500. The Nasdaq also, we're back above that and held above for the first time in a while, above that volume weighted, the I keep calling it the volume weighted average price. I'm so used to talking about those, but the low from this summer in June, and you can see the volume weighted average price anchored to that kind of comes together now with the 50-day moving average. I'm sorry, and the volume weighted average price from the August high would give us a level at about 287. Those are levels of interest. Now, on this 30-minute time frame, we're looking similar, and here's the 20-day moving average when you look at it on a shorter term time frame. So looking at the SPY, you can see there it is, just starting to curl higher here. So back to the Nasdaq, the ideal scenario is, maybe it runs up, people get a little bit excited, feel like they missed the boat Monday morning, then it pulls back down, creates a higher low, and then we would want to be a buyer somewhere over here with a stop under that level. That is if it were to do that. Now, maybe it just runs up, then kind of continues to just show us choppy action. That's certainly possible. There's no evidence of a longer term bottom here. There's the potential that we can rally up towards this level, and that would be great. Our first real level of interest is really at about 284, 285. That's this prior support, which became resistance, and that's where this red anchored volume weighted average price will come down to meet it. That 50-day moving average is declining at about this slope. So the 50-day moving average next week is likely to be found at about 286. So keep an eye on that on your daily chart next week. The Russell 2000 has kind of gone a little bit more neutral here, and it's you can see that the volume weighted average price anchored to the peak from this summer and the low this summer. Both were tested on Tuesday morning on that gap higher, and that was exactly where supply was found, which is kind of interesting because that's where I'm sorry, I was actually thinking of the shorter term time frame, but that's where the resistance was found so far. The intraday time frame, again, if we're to see a pullback like this and then break past this level to maybe either buy it here or buy the breakout with a stop under here, is what would be the bullish scenario. This week's lows in all of these markets are going to be very important to measure risk against going forward. When I say measure risk against, that means if we can find an entry, let's say it does something goofy like this and then starts to recover. If we can, purchase over here, that's actually a better scenario than if it was just to be a breakout buy, because we can buy with a tighter stop. We would have a higher low right in here. Anyways, back, this is stuff I talk about for subscribers to Alpha Trends every day. So there's not 4 days of missing pieces if you're watching this on YouTube or for free somewhere else that I posted, which if you are watching on YouTube, please give it a like, subscribe, leave a comment. I read them all. I actually, comment on most of them. The volume weighted average price from the 2018 high is where we did find buyers in the semiconductors. This is also the 61.8% retracement we've been talking about from the 2018 low to the 2021 high. That's the 61.8% retracement. So the daily time frame, it's still well underperforming the other markets because it's not above the summer lows. So let's see if we can get this market back above that. It's possible I could just squeeze it right up to this level, then come down, find some support in there, and then guess what? What does that start to look like here in this market? Well, then you start to see this could be a shoulder, this could be a head, and this could be a shoulder. And a lot of people get obsessed with these patterns without really understanding what the pattern means. All it is a simple transition of trend where we see that we've got this pattern here of lower highs and lower lows. So once we see this market do something like this, and then it creates, let's say in here, a higher low, and then it goes on to make a higher high, well, guess what? You just completed your inverted head and shoulders pattern. We're just replacing a pattern of lower highs and lower lows with a pattern of higher highs and higher lows. That's why it's a reversal, because you break the trend line and you create the patterns of higher highs and higher lows. So it doesn't mean the market will just rocket ship higher. We've got all of this potential area of supply ahead, starting with the anchored VWAP from the summer high, the 50-day moving average, the volume weighted average price from the low over here. So those all coming together, we're still below all these declining moving averages. I am still of the belief that if they don't scare you out, they'll wear you out. It doesn't mean we might not see a significant rally like we've seen significant rallies this year so far. Maybe it rallies all the way up to 220 from here. That would be a great trade, but then comes down and does something like this, and we don't bottom out for a real bottom until the longer term moving average looks like this. So trade the rallies for what they are. And if they allow you to continue to raise your stops and somehow you magically catch the bottom, then that's great. But it shouldn't be your goal to try to pick the bottom. The biotechs this week, they ran right up to where they were supposed to. We've been talking about this. The 200-day moving average is still declining, and when the market rallies strongly, as it did here, into that declining 200-day moving average, it's generally going to find supply in that area. Doesn't mean it's going to be exact like it was this week or over here, but over here we spent some time distributing. That's why we use multiple time frame analysis. So this market group is just looking more neutral than anything. I don't really see anything of any particular interest that tells me we should be involved. Let's talk about a couple of individual names. Netflix was the big winner here this week. It made it up through the volume weighted average price off the peak, through the declining 200-day moving average. Now the 200-day moving average is declining. It's kind of surprising to me a little bit that we're still holding above it, but maybe another day or two of strength, and then it starts to digest these gains. You have to ask yourself, where has it come from? 210 to 290, 80 points on 20. That's about 20%. So it's up about 20% off these lows recently. It doesn't seem like low risk for a new purchase here. Tesla, we've been talking about this volume weighted average price from the breakout point here, and it is holding it on a closing basis for the weekly time frame. So what looked like it might have been disaster for Tesla, I was thinking it had the opportunity to still to do this, and it still may, but for now it seems to have avoided the carnage that we've seen in so many other areas. And you might be saying, well, what is he talking about? The market was up big this week, and it was up big this week, but it doesn't mean every single stock was up big. Snap got destroyed. THC, healthcare got really just terrible for such a so-called blue chip. Robert Half Inc. ARHI, terrible day. Allstate, that's what I'm trying to think of. Allstate got hit hard here this week. It was looking bullish. Earnings came and it gapped lower. That's why I don't hold ahead of earnings. Generac, all the way down to his volume weighted average price from the IPO. Just awful. That was 12 years ago on this company, and just good company supposedly in a downtrend. Verizon still getting annihilated day after day after day. So you've got to be aware that we're in earnings season, and it's going to be individually stock focused in terms of where the winners and losers are. Energy names, as mentioned, had a big week. Look at Schlumberger. This was just a massive one. I put this one on Alpha Trends for subscribers. I told them I don't, to buy it above here. Some people did buy it. I did not. I don't buy these. I don't buy energy names. You might look at it and go, well, what a fool. Why doesn't he buy those? Because I haven't done good with them historically, and I'm okay with a stock rallying without me. I'm not here to try to get every single winner. I'm here to get every single winner that fits my parameters, what works for me. Hopefully you know what works for you and what your time frame is. If not, come take a look at and maybe take a 2-week trial to alphatrends.net. Thanks for tuning in.